All right, let's talk mortgage rates, the future of Fannie Mae and Freddie Mac, and more. Joining us right now is Bill Pulte. He's the director of the Federal Housing Finance Agency. He serves as chairman of both Fannie Mae and Freddie Mac. And Director Pulte, welcome. You have been busy in your first days in this job. You've had a flurry of activity. You want to talk through what you've been doing since you got there?
Sure. You know, we had the benefit of Trump 1.0, and I actually said to the old director, Mark Calabria, I said, what are some of the things that you would do? And frankly, within the first week or two, we did them. And we're going to keep on doing it. You know, the last 4 years, inflation has been out of control, Becky. It's crushed the housing market in terms of affordability. And frankly, we're working every day to reverse it, both HUD and us.
What can you do on that front? How can you slow inflation?
Well, we have a great president, and the president is totally focused on reducing inflation. As you know, inflation ripped the last 4 years. And what happened when that happened was interest rates went up dramatically. What happened was people got locked into their homes. They got locked into these rates. And as you know, you have new homes and then you have old homes, and they both compete against each other. The only problem is that the old homes have been basically untap worthy. That's not a word, but you can't even tap into these old homes because they have such low interest rates locked into them. So you only have the new home builders.
Right.
Yes, it's been great for my alma mater, Pulte Homes, and D.R. Horton and Lennar. But is it really good for the American consumer if you can't get that old inventory moving?
Well, we have seen higher rates recently. In fact, you're looking at 30-year fixed right now, mortgage at just under 7%, 6.92%. Those are not rates that are going to lure people out who have 2.9, 3.5% mortgages. And, you know, the president's been very vocal about wanting lower rates, but so far the FOMC has not responded.
I wouldn't bet against this man. I'm very confident, frankly, that he'll solve the interest rates. He knows a lot about interest rates. He knows a lot about tariffs. There may be some intraday or otherwise noise. But the other thing is to get Americans earning again and not have inflation. You know, home prices being up is not necessarily a bad thing in and of itself if you have people having earning potential. But for the last 4 years, people's earnings, you know, as a matter of adjusted for inflation, has been reduced, and people couldn't afford rent. They couldn't afford to buy a new home, et cetera.
Bill, let's talk a little bit about Fannie Mae and Freddie Mac. You recently fired the CEO of Freddie. You fired the majority of the boards of both Fannie and Freddie. You appointed yourself the chairman of both of those boards. And there have been some pushback from Democrats in particular who are worried that these rapid-scale changes, depending on what comes next, could upend the housing industry. Fannie and Freddie are responsible for about half of the loans in the $13 trillion home mortgage market in the United States. What's happening there? What's your plan? And what do you say to those charges?
Well, this has all made the housing market way stronger. Frankly, Fannie and Freddie were bloated. People weren't even working there. There were 16,000 employees. Becky, we'd have kitchens where they were making caramel popcorn and cheeseburgers and pizza. Nobody was there to eat these foods, so we ordered everybody back to work. I was very disappointed with some of the stuff I found also in terms of the board, in my opinion, as it relates to multifamily fraud and then also the work from home, amongst other things. We need to have an FHFA director that's engaged. One of the things that's interesting is many of the employees at Fannie and Freddie have never seen an FHFA director in these buildings. I actually said to the driver, I said, who's driven for all the directors before me, I said, I'm going to, on my first day, I said, let's go to Fannie and Freddie in Virginia. He says, sir, I don't think that they're in Virginia. I've never been there before. I've never been to these buildings. We need a director who's in there. President Trump hired a businessman. We're going to run these things as businesses. We're going to get these businesses turned around, and they're going to be great American icons once again, but in a safe and sound manner this time.
What's the fraud that you think you've uncovered there?
Well, we see fraud everywhere, unfortunately. I think that generally speaking, the businesses are very safe, but we're making mortgage fraud a huge area of focus, specifically on single family and multifamily. A lot of people just think that it existed in one or the other. We see it in both, and we're going to eradicate it. It doesn't matter whether you're a politician. It doesn't matter whether you're a lawyer. It doesn't matter whether you're somebody famous. If you commit mortgage fraud, we are going to go after you.
Some of the questions that have been raised about this are how these things get rolled up and then packaged off. I mean, that's what caused the 2008 financial crisis, having these mortgages rolled up, these mortgages that hadn't been checked. Do you see fraud on that level?
No, I don't see it on systemic issue level. I see that we have, frankly, safety and soundness in the market. These businesses are very safe. It's just, you know, as an American, when you're walking through the halls of Fannie and Freddie and you don't see anybody showing up, or when you see people trying to normalize the word fraud around these once great institutions, it's discomforting. And so we're taking action and saying, anytime we hear the word fraud, alarm bells need to go off in our head, and we need to do something about this. And so we're working with the DOJ and the FBI and, frankly, all of our partners, all law enforcement, no matter where it is, to prosecute this mortgage fraud. And I tell you, if I told you some of these stories in terms of mortgage fraud, you wouldn't believe it. Are
Fannie and Freddie going to be privatized?
We'll see. We have a great deal maker as president of the United States. We have, for the first time, a full term. We started out early in terms of being a confirmed director of FHFA. We have a great Treasury Secretary, and we have a great president. So I look forward to working with them. My job right now is focused on making sure that there's operational efficiencies, that the bloat is gone, that these businesses are safe and sound, and that, frankly, they're in tip-top shape to do whatever the president elects to do.
I like that first question, Bill, where Becky goes, well, what'd you do in the last week? It sounded like an Elon Musk Doge thing. You got an email, and then you listed like 5 things you did in the past week. So you passed with flying colors.
Well, it starts at the top, and President Trump's very busy, as you know. And the good news is he's a home builder and he's a builder. So being in this position, it's really kind of nice, frankly.
We've never met a real estate person that didn't want lower rates either, I don't think. Have we? You think there's room to move there, Bill?
I think the president is all over it. I don't think anybody knows interest rates better than him. I think he's on it between the taxes and the tariffs and the deregulation. I'm very optimistic about this administration. And frankly, I think that there's going to be, at the right time, a housing boom. But we have to reverse what's happened these last 4 years, Joe. Nobody could afford a home these last 4 years. And frankly, people could barely afford rent the last 4 years. We need to change that, and we're working every day to fix that.